You go over to China, 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 China. You take China.
China.
China. I love them. China. China, 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 China. I have to have my China.
China, China, China. Oh boy. What happened yesterday in the markets is really just mind-blowing. And well, first of all, congrats to everybody who is invested in NIO, who is a NIO bull and also held strong. You should probably be rewarded. Personally, I'm now up 10x officially on my investment, so that's great. However, this is still another 10x away from Bailey Gifford's price target if you've watched my video, but this is up for another video and another story, because I think the 16+% of NIO yesterday, this is not related to company news. Yes, we have the 5,000 cars production monthly confirmed now. This is great, but this is not why the stock jumped 16%. This is something bigger, and this is what I want to talk about in this video. And in my views, it's super important what has already started happening and will be happening over the next couple of days. And I will give you my views, talk about the good and the bad and the ugly, and tell you what I'm personally doing with it. Remember, in my last video, I told you that I sold off my US exposure in a big chunk of my personal investment. Actually, I even sold off more meanwhile. And this has to do with something that I think is currently happening in the market. And this is a big shift of capital into Chinese and Southeast Asian stocks. And this, as I am explaining in this video, can be really historic, and I think we really need to pay attention to that. And so first, let's see what has happened yesterday. Starting with NIO, I noticed in the beginning of the trading yesterday, Chinese EV stocks all in general have been up around 10%. So Li Auto was up 10%, Xiaopeng was up, NIO was up 10%, BYD was up. All of the Chinese EV stocks been up. Only by the end of the trading session, we saw more refinement in terms of where the money goes. So NIO was shooting up, got more gains than actually some of the other EV stocks, which in my personal view makes sense because it's the more rewarding company in the end. But this wasn't limited to just the EV stocks. Also, Alibaba was up yesterday. We saw some gains with Tencent, and also, for instance, with a company called Meituan, which was up around 10% yesterday. And this is not normal, and I think this is a one-time opportunity here that I think that the capital is on a way of flight into safety. But in general, we could see that this was also kind of, a way of jumping really fast into this market, possibly without much thinking, just buying what you can get in terms of Chinese stocks, and then over the trading periods, adjusting a little bit to where to put more money and where to put less money, and possibly kind of thinking similar to why I sold off my US exposure as well. And as I mentioned before, I'm moving it more into Chinese stocks as well as Bitcoin. And to me, as outlined in my last video, the trigger was that the EU and Germany is going into a second lockdown. Actually, I have to say I was wrong on my assumption that we wouldn't have a second lockdown. I thought it's unthinkable. The politicians were saying like, we learned from the first lockdown, so we will prepare and whatever. But what happened in the end is that when the numbers are rising, the pressure on the politicians to act is really getting dramatic and high. They need to do something about it, and they've done it. And this is why I'm actually thinking that even the US, which is lacking a little bit in time, may not be able to avoid a second lockdown. Although right now you may still be in a view that, well, we can handle it and so on. But I think when the numbers are building up, the panic is rising and so on, then the pressure is just getting too high, and the politicians will act on it. So with all of the investors selling off their shares, so look here at the German market. I mean, this is a mess. This is down, I think, around more than 10%. Yeah, actually, we're down almost 13%. So this is really a lot of money that is going into cash right now, and it's looking to go somewhere. And on top of that, we are also giving the companies subsidies. So for instance, now in Germany, we are giving away 10 billion euros in order to support the restaurants that have to close and so on. So there's lots of money being created in the economy, and it needs to go somewhere. And of course, it will just be inflated if you keep it in cash on a bank, and there's nowhere to go. So people are looking to invest in it. But would you now put it into the European economy or the US economy with an election coming up, and even the prospects of a second lockdown or a third lockdown and a fourth lockdown until this is all over? So I think investors are currently realizing that, and this could be a historic turning point, because before that we had all of the decoupling talk, and people were afraid to go into Chinese stocks because of the prospects of delisting. I actually made a video about that, but this risk now seems pretty manageable in contrast to what we are facing here in the West. And while we here are struggling to keep our economy afloat and so on, in China what they're currently doing is they are doubling down on innovation. They are producing their own tech, their own chips, their own algorithms. They are building a strong economy which is independent, working on its own. Do you really think that China wants its manufacturing back once we open up again? The US has really lost all of the leverage on China. Now even the capital is moving into China. So China really won everything out of this crisis somehow. And of course, they will come out of this crisis stronger with more attractive companies that will be able to generate more profits and capture more of the market. So it just makes sense. Capital is going to China and Southeast Asia, which is also managing it quite well, and where lots of young, attractive companies are. And so what am I personally doing about it? Well, first of all, as I mentioned in my last videos, I've been selling off my exposure to those risky US companies that I think will have a harder time in the next couple of days until election, and when we see where it's going to with the president. And maybe to add a little bit on that, I think it really doesn't matter if it's Biden or Trump that is being elected in terms of the US-China relations. The US will go hard on China anyways, no matter which president. But as I mentioned before, I don't see any leverage that the US is having currently on China anymore, because what do you want to hurt them with? China is kind of isolating itself, and that really resonates well with its history. And I don't want to make this a history talk now, that will be too much, but the Chinese perspective is really that they have 5,000 years of history, and what's currently happening is really a tiny bit of their history, and they are really not impressed by all of those tariffs and this kind of things. So I think it's really wrong to look at which president will be the outcome of this election in terms of the China-US relations. In terms of a possible lockdown or so on, that might be a different story, or which president will have a better influence on the economy and such. That might be a second question here. But in terms of what is going to happen with China, I see no difference here at all. So what is it that I'm going to do about it? Well, first of all, I think today might be a tough day. So actually pre-market, I sold off more of my tech exposure to the US market, because I think we yesterday had the big tech reporting, and although they beat some of the estimates, it seems like the market is selling it off and taking some profits, once again going into cash, and that cash wants to go somewhere, and I'm really in doubt that it will go largely back into the US economy, to be honest. Instead, obviously, I think it will go even more into Chinese stocks, or stocks that have a China business. For instance, also Tesla, I think, will be doing fine. Some of those companies that have a bigger China exposure, where everything is kind of, still working right now, I think they will be on the winning side. And obviously the Chinese stocks and the Southeast Asian stocks as well. And this can be good and bad for us as NIO investors, because, I think NIO, although it will go down a little bit if the market is going red in general, I think it will not dip as much as, for instance, the US counterparts. In general, Chinese stocks will go red a little bit. They will also sell off, but they will not go as much down as the other stocks. And so I think this is a really nice opportunity to actually buy into some Chinese stocks. On the other hand, if we have more and more capital that is really jumping in as a rush into companies like NIO and so on, this could also even artificially inflate the company, and because people are not really looking onto the valuations anymore and so on, they just want to park their cash where it makes sense, and this will also put more pressure maybe, or maybe more volatility on these stocks as well, because we will see profit taking, we will see adjustments to the stock price up and down. So this will be a really bumpy, volatile ride in my views. So as mentioned, I have now way more cash piled up as usual. Usually I'm almost fully invested, but now I'm looking to buy those dips in the Chinese stocks that I'm seeing. And well, I'm already very exposed to NIO, I'm very exposed to Huami and so on. So I may not do really large purchases in those stocks, but rather look into some other companies that I'm already invested in that I will maybe build up the position even more. So one more company that I'm possibly going to add today is actually Meituan. So yesterday, yes, it went up 10%, and I'm actually owning their stock, and I'm actually up 200% on my investment on this one. But I think this could be kind of one of the new FANG stocks from the East, to be honest. I'm kind of flying under the radar. The valuation is high, of course, it has been running up, but I still think that the winner's gonna win now. They're gonna take it all. They may run even further. For instance, another interesting one is C Limited. I'm not having a position in that one so far, and it's been valued really high. They're active in the terms of e-commerce in Southeast Asia, but although it's maybe valued quite high, I still see a little bit of potential in this stock, to be honest. So I'm thinking about if this will be dipping much during this new downturn, then I'm possibly try and build a position in that one as well as I will be looking to add into Cloudflare as well. I like how the chart is building up here again, and I really like that I have a big exposure to the Chinese business, to Chinese market in general, and I still think that this could be a winner in the long run, although it has been running up as well. Also, in addition to that, I have allocated more money to Bitcoin now, so I will be actually buying even at these levels of Bitcoin. I do think that it makes sense to have this kind of as a hedge, although it's not a hedge for equities, as we can see. If the markets are going down, then it is actually also going down, but I just believe in the long run story here as a value of security and an asset that will get much more traction in the future, as there is limited supply, and we now see starting that companies are actually adding it to their balance sheet, and I think people will really in such kind of times value this kind of a digital currency here as an asset. If you want to know more about my views on this Bitcoin and crypto investment, you can become a patron because I wrote a blog post on that, as well as I have been outlining some of the updates on my Huami investment there. So this is an important market update. I think today might be challenging for US tech stocks, so they may go really red today. And still, I'm not thinking that this is the end of the bull run here. It's far from over. The environment is still the same. We still have low interest rates. We have lots of cash in the economy, but you now really need to think carefully, where is a safe place to invest it? Safe in terms of as safe as equities can be. But I told you that my personal move is that I'm going to minimize some of my exposure to those American companies, especially to the not growth oriented companies. Instead, I will be shifting it even more towards the Chinese stocks that have a Chinese market exposure, that might be even American stocks, and on top of that, Bitcoin as a secondary option here. Because in case that we actually really get a sell-off in the market today, I think this cash will also be going somewhere next week. People will think it over during this weekend, and maybe it's coming to the same conclusions as I am outlining here today. Maybe not. I could be wrong on that. So this is not investment advice at all. I'm just sharing my personal views here, being transparent about what I'm doing. As mentioned before, I'm rarely selling. I'm usually just a buy and hold strategist here, but this time I think I have to react here, and I think this now is bigger. This is a monumental shift, and maybe even dating back in time in world history, this might be an exciting moment looking back on what has happened today and in the next couple of days. So I hope you liked this information. Let me know what you think down in the comments, and stay tuned for more content on NIO Next.